morning everyone, and welcome along to the research presentation for this Wednesday the 25th of February. My name is Kai Lewis, I'm one of the equities analysts on the floor, and joining us this morning will be Greg Smith, the head of research. What are your thoughts on the banks at the moment?
Yeah, of course they do sort of dominate, I suppose, interest, in the market with, I suppose, the yield appeal that they do have, and tend to be pretty widely held. So I think that's why they continue to engender a lot of interest from investors. In terms of our position, so we've had positions in three of the top four banks for some time, and we recently took profits towards the end of the year, issuing sell-half recommendations across the board. The reason sort of we took that view is that the banks had a pretty stellar run, and we did feel that, I suppose, that the glory days of supernormal profits are probably coming to an end a little bit. But the reason we sort of didn't sell out completely, and this still stands following our recent coverage of all the banks and putting them back to hold, is that whilst the days of supernormal profits might be over, there's still, I think, plenty to run in terms of profitability growth, albeit slightly less. We don't think the housing market is going to fall over, despite obviously the fact you've got some pretty big hot spots in the likes of Sydney and Melbourne, but sort of really see that being cooled down by macroprudential measures. I think that the big relative point for the banks is where interest rates are at, and this is important on a couple of levels. See, we've been talking about interest rates being cut for some time, and the RBA has followed through there. We think they're going to go again with another cut, if not a couple, and that's going to have the impact of continuing to ensure that the housing market bubbles along, which is good for the banks. And if you only have to look at recent results from the likes of ANZ and CBA, that the retail side is doing pretty well on the back of that housing sector and mortgage lending. The other reason, or the other appeal, I suppose, of a low interest rate environment is really for investors as well. And I think the banks are going to be able to continue paying those juicy yields, which really increases their appeal, I suppose, when you compare it to the low rates offered in term deposits.